Very good. Thank you so much, Mark and Julie. So
Thank
now
you.
we can segue into another module. All right.
Okay.
And another 15 minutes or so. You guys have time to go over second module.
Sure.
Sure.
Okay. All right. Once again, welcome, Mark and Julie. And this is Seewing Yee from the Yee Real Estate Network. And right now we are doing an update of your real estate journey. And you guys started a couple of years ago, and you guys purchased a lot of properties. And your goal is to using economy of scale. You got your ambition and motivation is to buy create a massive real estate portfolio of investment properties to help you to achieve your retirement goals. So with that said, you guys already purchased 4 rental properties, 2 using your self-directed IRA, and 2 using regular investment loan financing, 20 to 25% down payment. And your goal is to buy another 2 rental properties in the Buffalo Niagara Falls area. So this past 2 years, you guys have evolved. You guys have gone through a very challenging journey, and you're able to using economy of scale to buy out-of-state turnkey properties to achieve cash flow and appreciation and tax benefits, the whole multi-dimensional aspect of real estate investing. So with that in mind, can you share with the audience what has your journey been, and what is the what was your expectation? What was the result of your journey so far? And also, when you conclude these remaining 2 rental properties or more, what is your goal down the road when you achieve the retirement goal? What is it like? So go ahead, Anna.
You want to start? Or you want me to start?
Go ahead.
Oh, okay. Well, the journey has been great. I mean, I can't really stress that enough. We've gotten a lot of really good guidance from you, Seewing, in this process, because this is brand new for both of us. I mean, I'll just say myself, I have had real estate experience from the end of an agent that never bought property, which is kind of crazy in itself. So I've helped other people buy property. I've never done it for myself. And it's been so many years since I'm out of the business. It's really like I'm starting from scratch. And so I had a foundation, but I had no idea again about buying the out-of-state property. So this has been a really exciting journey for us. I think we've achieved some things that we didn't think we were going to ever be able to achieve. It didn't take a lot of money, but it just took persistence. I think people just have to be willing to be persistent and don't take your eye off of the goal. We have the 4 properties. As you said, we do plan to buy at least 2 more. And really, our goal going forward is just to continue to buy as much as we can. We have the rental receipts coming in. At the end of the year, we'll either use some of that to pay down the loans. And the 2 loans that we have are both very small comparatively. If you think about California real estate, one loan is for $36,000 and one loan is for just a little over $50,000. So you got 2 properties with less than 85,000 leverage. And so we want to continue to pay those off and then get more property. I mean, I can see this really going on until forever, because then as you pay them down, you're getting more of the income because now you don't have a mortgage against it. Then that's more income coming in for us. And how many we would like to have, I don't even know at this point. I think we're going to get as many as we can get and just continue to work the process. We've had a lot of success in Buffalo in terms of cash flow and property value increase. That's something we were not expecting. We were expecting the cash flow. That was the reason that we bought the properties, to help supplement our retirement. But we weren't expecting the increase in the property value the way it's been, just having owned, like the first 2 properties, we've owned them just a year, and we've already seen almost a 50% increase in their value. Or no, I guess 100%. Yeah, from 50,000 to 100,000, that would be 100%, right? Yeah.
Yeah. Can you specifically, one property at a time?
Oh, sure.
Share with the audience, what was the approximate purchase price 2 years ago, and what is what is the market value of each of those
Mhm.
properties? Real high level, real quick.
Right. Yeah, real quick. So we have the 4 properties. The first one we bought, we put it in my self-directed IRA, and the property, it was a three bedroom, 1 bath. It was $53,000, and that property right now is worth 96,700.
Okay.
The second one is a duplex. We put it in Mark's IRA, self-directed IRA. We paid 83.5 for it, and it is now worth 117,000. So
Okay.
those were both last year. We closed one in July. Mine was in July. I think his was later on in September, October.
Okay.
This year, we closed a property in the Tonawanda area, which is again very close to the Buffalo Niagara Falls. We paid 63,000 for that one. That one is now worth 121,000.
Wow.
So we bought it way under market. And so, like I said, we just closed that in April of this year, and it's now doubled in price. And then the last one, we just closed it last month for 48,000, and it's worth 48,100. So that one's, you know, we got what we paid for on that one. So that's really exciting. We were not expecting that kind of property increase in value with that. So that's a big bonus on top of the cash flow that we're getting.
By the way, I just want to caution the audience: past performance is no indication of future success. So we don't know the future, but
Right.
you guys are buying for long term. You
Right.
guys, just ride out long term. That's the most important
Yes.
thing. So let me ask you this. Now, the next two property you're going to buy, I know, I mean, what's going on with the real estate market. There's a lot of negative headlines going on, what have you, and the interest rate has skyrocketed to all the way to 7% on a mortgage interest rate. For investor, the mortgage interest rate, I believe, is anywhere from 7.75% to 8% to get an investment loan, 30-year fixed rate mortgage investment loan. Now, the popular belief is that many investors are staying in a sideline because of the perception that there will real estate crash, bubble, whatever. But they don't know is that every local market is different, right? There's no such thing as a national real estate market. Every local housing market is very, very different from another. And Buffalo Niagara Falls are clearly a very, very stable market so far. So what people gonna be very, very surprised. I'm not, but we need to clarify why you are making an informed and educated decision for your next two property. You're gonna potentially buy with 20 to 25% down payment, and it's still okay for you to get a fixed rate loan for investor, even at current 7.75% to 8% to buy your property. Tell the audience what justify you to using this the perceived high interest rate loan to buy investment property, because most people have this negativity that you shouldn't do that. You should stay in a sideline until much later.
Yeah. I think we miss out by staying on the sidelines. Like you said, nobody can predict the market. Even in investment market, you see people trying to time the market. I don't think you can really do that. And I think I have lived long enough to see that it doesn't matter what the interest rates are. Real estate is never a bad investment. It just isn't. Because I remember my parents, getting interest on their, what do you call it, just regular checking or savings account at 14%. Now, this was years ago, but now your interest rate on your savings account is like nothing, like 0. nothing. But the house that they bought 50 years ago has gone up tremendously in value. And it didn't matter if it was a 14% interest rate or a 7% interest rate or a 21% interest rate. The house that they lived in for over 50 years, it's like they were like overnight millionaires that just did it one year at a time by just owning the property and just keeping the property. So I don't think there's ever a bad time to invest in real estate. And again, our mindset was long term. Now, if you're trying to flip and do all that. I can't tell you about that because that's not what we're doing, and maybe that might be crucial, it's 6% interest or 8% interest, but for us, it's long-term. The property values, again, that we're buying, because the loans are so small, the mortgage, even with the taxes and insurance, it's almost as cheap to buy a house as it is to pay my cell phone bill, because they're about the same price what we're paying.
Yeah.
But one is an asset that we're going to have forever, that will bring in income forever. One is a liability that we're going to pay out forever. So
here, I want you to, I agree with you. Share with the audience. Okay, let's assume you're getting almost an 8% 30-year fixed rate mortgage to buy a rental property. Let's crunch the numbers. No, don't crunch the numbers. It takes too long. Let's go over the high level. I know what's going on. Okay, let's say you buying you're targeting right now. You're buying 2 remaining property for maybe 70,000, something like that. Something like that, right?
Right.
Let's crunch the numbers. Let's say you're targeting a property in Buffalo, Niagara Falls for $70,000 as of right now. You're analyzing the deal. What is the rent for that property? Estimated gross rent.
Maybe 800-900, maybe.
Okay, let's say 850. 850 gross rent, $70,000 price of a house at 8% interest rate, 30-year fixed rate mortgage. So monthly gross rent minus the property taxes minus the monthly mortgage you pay on the 8%. By the way, you're not paying the mortgage. Who is paying your mortgage? Your tax.
The tenant pays the mortgage.
No. Okay, not yet. Let me finish. You calculate your monthly taxes, your monthly insurance, your monthly property management fee 10%, and then your monthly mortgage that you're paying on your 8% interest rate mortgage, and factor in additional 5% of maintenance of your rental income and 5% of vacancy of the income on an annual basis.
Right.
Whatever that amount is, that is your debt service. And by the way, you're gonna outsource the debt payment to now you say the word,
tenant, to the renter. Absolutely.
It is that simple. And then you buy a property that have a projected gross rent, whereby the monthly gross rent and the tenant's rent they're going to pay you will not only get able to pay you all your debt service, mortgage, taxes, insurance, property management fee, vacancies, and maintenance. At the end of the month, you still have leftover positive cash flow. Could be $50, could be $100, could be $200. It does not matter. You have at least a break even or a slight positive cash flow for the time being. And over time, guess what? You could increase your rent because inflation will cause rental rates to increase. Guess what? The debt, the debt service, the mortgage could be decreased, systematically because the renter could pay down your debt. And then long term, you're probably going to increase in equity appreciation, 3 to 5% normally, historically speaking. So tell me, am I right? Am I?
You're absolutely right. Absolutely right. And I think that is, again, the benefit of having property is that you're gonna have the property, the tenant is gonna pay off the loan, you're gonna get the tax benefits, and you get this positive cash flow coming in for as long as you own the property.
Yeah. At the end of the day, if you're a primary homeowner, if you're buying an owner-occupied property, yes, the monthly mortgage is critical because a homeowner has to use their paycheck to pay for the mortgage. But investors think differently. Investors, when they buy rental property, is not about the interest rate on the mortgage. As long as whatever interest rate you're using, as long as the gross rent on a monthly basis cover your mortgage payment and then the other debt service, you're gonna win.
Absolutely. Yeah, that's it. We're excited to do our taxes next year. We actually have some write-offs now.
Okay, so you bought 4 rental property, you have 2 more. So you're scaling your portfolio. You're using very little of your time because you buying out-of-state passive turnkey property using a very reputable turnkey provider that you like and you trust, and you surround yourself with a team using me as your coach, mentor, advisor. So tell me about the experience. We only have 2 more minutes remaining. Mark, you're welcome to say something as well. Tell me, how was your journey using this concept, using this methodology, using this, scenario? Go ahead.
Yeah. Well, I think that you were kind of amazed at like the whole passive income concept with the money just continuing to come and we don't do anything for it. I don't know if you want to talk about that a little bit.
Well, yeah. I mean, I was amazed at that. I guess I had to see it to believe it, and I think that just taking the very first step to do it, that was the most difficult part. The fear of getting caught up in a scam or something of that nature, that was what was most difficult. But I see it and it's happening, and it's a good thing. It's a good thing.
Yeah, I tell you, I mean, Mark, your trade is a construction worker, and Julie, what is your occupation trade at this time?
At this time, I'm a home or housewife. I call her domestic engineer.
Okay, sounds good.
So, I've been doing that for a while, so I like that career.
What I'm trying to say is, you guys are newbie. 2 years ago, you guys are newbie. You have not owned any property. Just like a lot of people out there, you overcame fear. You took action. That's the key for financial independence. So there's a lot of people out there that have this massive fear. They are scared. They're sitting on the sideline. From you guys having gone through your mere 2 short years of investment experience, what type of parting words you want to share to those people that are scared, that want to buy properties, they are allowing negative headlines to prevent them from taking action. So what are your messages to the people out there?
I would say the whole concept of passive income through a turnkey system really registered with me last month. And I'm just going to share a little personal information. You're aware of Seewing. I just lost my mother last month. And, when you lose a loved one, everything kind of has to stop, because there's preparation and there's things to be done. And interestingly enough, she passed away on the 14th. Buffalo sends out their rental receipts on the 15th. And so it was several days before I even had realized that the money had come. And what really registered for me, the whole concept of having passive income where you have done a transaction once and it continues to come in spite of things. If you have a job and you get sick or you can't work or a loved one passes away, you got to stop working and you're not getting paid for that time. But the whole concept of having passive income, if he gets sick, if I get sick, if something happens to our daughter or something, we can take the time to care for that person and the income continues to flow. And so that really, it's a little bit of a personal touch, but I don't think it didn't really register to me how important passive income is until I lost my mom and realized I had to stop doing everything to take care of the arrangements for her. But our income continued to come in and we didn't have to do anything. So that's a little bit of just encouragement, hopefully, out of a sad situation, but hopefully it will encourage someone to step out on faith and just realize once you put it in motion in this turnkey system, it is seamless. You don't do anything. You just look up on the 15th and your check is there. Oh, your check is there. Your check is there and it'll go on forever as long as you have the property. So wow. I would just encourage people. I don't know if you want to add anything to that. I know it was a little bit of a downer to say for the circumstances, but I think it drives the point home.
Yeah, great. Wow. Powerful message, Julie. Mark, you have any last words you wish to share?
Seewing is legitimate.
Thank you.
Mhm.
Thank you. I really appreciate your trust in me, and thank you for for working with me and my team. So your journey continues. Thank you so much for your time. Really powerful message, and uh, your, like I said, your journey continue for a while to come, and we're gonna come back with some additional testimonial updates like we have been. This is our perhaps fourth testimonial videos, and I want to track your long-term journey so people can see, the challenges and the ups and downs associated with become an investor, and ultimately you're going to achieve your financial freedom goal. And so when you achieve that ultimate goal, you dictate the life you want to live, and
Correct.
you're not gonna let other things dictate your life because
There
of
you
passive
go.
income and everything else.
Mm-hmm.
Okay, so that's all I have to say. Thank you so much, everyone.
Thank you.
Julie and Mark, then it's been a blessing working with you, and we'll get back to your journey in the future. Thank you so much. Good luck, and
Thank you so much. Appreciate your time.
all right, bye bye.
Okay, bye-bye.
Bye-bye.